Good morning, good afternoon, good evening. My name is Market Maker 69420, and in this episode, we're going to go over the market open and how it affects the economy. Market opened on March 16th, 2026, with a clear risk-on undercut despite lingering caution. U.S. equity futures rallied sharply while volatility collapsed. Energy commodities suffered steep sell-offs, and cryptocurrencies extended gains with notable decoupling from traditional assets. Soft manufacturing and inflation data provided some policy breathing room, but attention now turns to potential headlines from the Trump speech and ongoing macro flows. Let's talk about the stock market. When looking at index futures and pre-market gaps, E-mini S&P 500 futures traded at 6,763, up 78 points, 1.17%, with an open at 6,608 and intraday range from 6,608 to 6,728. The move reflected strong momentum off the open and a positive gap dynamic relative to recent settlement levels. NASDAQ 100 futures data showed alignment with the broader risk-on tone, though specific quote were fragmented. Overall, futures action pointed to buyers stepping in aggressively at the open. When looking at pre-market movers and volume, specific top movers and volume details were limited in real-time snapshots, but the broad future lift and risk asset strength implied leadership from growth-oriented names with elevated volume in tech and cyclical sectors. No extreme outlier dominated the early tape. When looking at economic calendar and new catalysts, today's featured several releases. Canadian CPI came in softer than expected year over year, 1.8% versus prior 2.3%. U.S. New York Empire State Manufactured Index printed a weak minus 0.2 versus forecast 4. Industrial production rose 0.2% in line. Capacity utilization held steady at 76.3%, and NAHB Housing Market Index edged higher to 38. U.S. 3 and 6-month bill auctions showed modestly higher yield. A Trump speech at 8:30 ET and an upcoming RBA rate decision later remains key potential catalyst. Looking at market breadth and internals, real-time breadth snapshot were inclusive, but the strong futures performance and volatility compression suggests positive internal participation, with advancers likely outpacing decliners across major exchanges. When looking at the volatility gap, VIX, the VIX plunged to 23.6, down 3.59 points, minus 13.2% from a previous close of 27.19 and an open of 25.88. This sharp compression marked a clear volatility gap lower, signaling reduced hedging demand and a more constructive near-term equity backdrop. When looking at technical setup, S&P 500 broke above the open with conviction, establishing a bullish intraday structure. Key support sits near the session low, 6,608. Resistance lies at psychological round number and recent highs. The VIX collapse reinforced the setup for continuation higher unless macro headlines reverse the flow. When looking at sector leadership and macro links, risk-sensitive and growth sectors appear to lead amid softer manufacturing data, supportive of eventual rate cut pricing and easing global inflation print. The macro backdrop linked softer regional data to policy flexibility, while energy weakness weighed on related cyclicals. When looking at positioning and sentiment, the CNN Fear and Greed Index stood at 23, extreme fear, a modest lift from recent lows near 19. This contrarian setup, prices rising while sentiment remains deeply pessimistic, suggests sideline capital could rotate in on further confirmation. Let's move on to the commodities market. When looking at gaps from prior sentiment and initial momentum, WTI crude opened near $100.93 before collapsing to $93.48, a drop of 5.3%, creating a significant downside gap and negative momentum. Gold opened around 5,010 and traded to 5,012.70, drawdown of 0.97%. Natural gas dropped 4.09%, while copper bucked the trend with a 1.14% gain. Looking at key reports and inventory data, no major U.S. inventory releases, EIA or API, hit today. The calendar focused on production and housing data. Canadian CPI softness and U.S. manufacturing weakness offered indirect demand signals, but no direct storage update. When looking at U.S. dollar correlation, the dollar index eased 0.36% to 100, typically commodity positive, yet energy sold off sharply, suggesting supply or risk-specific drivers overrode the usual inverse relationship. When looking at technical indicators, oil broke lower with strong negative momentum. Gold consolidated with mild downside bias. Copper showed constructive relative strength. Volatility windows widened, notably in energy. When looking at supply demand and macro drivers, energy weakness pointed to potential oversupply concerns or demand caution amid macro uncertainty from oil prices and geopolitics. Industrial metals like copper benefited from perceived growth resilience, while precious metals faced mixed safe haven and U.S. dollar flows. Looking at commodity indices and benchmarks, the TR/CC/CRB index rose 0.21% to 365.79, while the DJ commodity index fell 2.07% to 1,364.73, highlighting energy's drag on the complex. When looking at liquidity and volatility windows, standard session liquidity prevailed, but oil sharp move created high volatility pocket. Metals and grain saw more measured trading. Now let's move on to the cryptocurrency market. When looking at overnight Asia sessions and gaps, Bitcoin rose 3.25% over 24 hours, $74,084.72. Range is between $72,323 to $74,372, reflecting positive momentum through Asia and Europe hours and a brief push above the 74,000 level that had acted as resistance. Looking at correlation to risk assets, crypto showed positive but decoupling behavior. Equities gained 1% while Bitcoin added 3%. News highlighted crypto acting as a refuge amid equity commodities, oil turbulence, and energy-driven macro noise. When looking at on-chain metrics, real-time snapshot, hash rate stood at 887.73, EH/s minus 7.64% in the last 24 hours. 24-hour active addresses 100,799. Transaction count 408,915, with average fees low at 35 cents. Network activity remains stable with no signs of stress. When looking at derivatives data, total BTC open interest reached 50.74 billion plus 8.3% in the last 24 hours. Funding rates stayed mildly positive, 0.0037% on Binance. Global long-short ratio 51.5% to 58.5%, and 24-hour liquidations totaled 172 million in Bitcoin, short disproportionately hitting the squeeze. When looking at ETF flows and institutional signals, spot Bitcoin ETF daily net inflows remain supportive. Recent print around plus 180 million, with BlackRock IBIT leading. Cumulative inflows exceeded 56 billion. Institutional accumulation continued despite broader market fear. When looking at technical setup, Bitcoin reclaimed and briefly surpassed 74,000 resistance on a short squeeze dynamic, establishing bullish momentum with higher highs and positive derivative positioning. When looking at news and sentiments, headlines described a crypto strikes back narrative, with short liquidations exceeding 344 million, Ethereum outperforming and crypto decoupling positively as a safe haven play. Sentiment improved toward neutral territory in crypto-specific gauges, even as fear persists. In summary, the March 16, 2026 Open delivered a tale of divergence. Equities found footing on volatility, compression, and soft data. Commodities faced energy-led pressure, and cryptocurrencies carved out independent strength on institutional flows and technical breakout. The session leaves traders focused on flow through from Trump's remarks, oil stabilization, and whether the extreme fear backdrop flip into sustained risk appetite across all three markets. That's all I got for you guys today. Don't forget to like, comment, and subscribe if you enjoyed the video. And if you'd like to support the channel, feel free to buy me a coffee on Patreon. Thank you. Bye-bye.